Okay, welcome everyone to the community-wide meeting. And in today's session, or the first part of the session, what we're going to do is we're going to take a look at potential leading stocks that make themselves available to you. And these are the ones that are listed in the weekly email distribution. Uh, when I send out the email on Friday night, there's the first line always is the best performing stock. And that typically is the best performing stock in that week. So it was picked in the prior week by somebody in the team. And then at the end of the week, we see based on 1 week performance, which stock out of between anywhere, usually we have 60 to 90, 100 stocks on a weekly basis. So that typically is the best performing stock in that week. And something I noticed last year, created a video on, was on this topic of best performing stocks. And if you just play the best performing stocks, these are very tradable and highly profitable. And I think, and I still think the group is underclubbing this opportunity. So I wanted to bring this back to the group's attention. Today, we'll take a look at the stocks that appeared in Q1 of this year, and I'll plan to do this on a quarterly basis. So we'll take a look at Q1 this time. Next time when we meet again, we'll do the Q2, Q3, Q4, because then we can look back and kind of look forward at the same time. So there's about 8 to a dozen stocks here. So let's take a look at those. And given where the market was, maybe we'll start with the market. Quick look at the market first. Obviously, the market was weak at the beginning of the year, so we can see it was coming back in, and it was trying to pick up over here, and then it pulls back in. So we're going to take a look at stocks that were best performing in this first quarter, and then we'll see what opportunities came up and how they fared. So the first item to note was in the month of January, certainly starting out the first 2 or 3 weeks, the stock picks which came in as the best stocks. So these are all kind of pre-qualified because all of these stocks will appear on one of the IBD lists. So we can take as a working assumption that they've been screened for some level of fundamentals to begin with, which kind of then allows us to kind of focus more on the technicals. So first out of the gate was COLL, which is Collegium Pharmaceuticals drug manufacturer. So this was actually on the list the very first Friday of January, and so it appears here. But let me take that. I'm putting the percentage. I'll leave it on. So there's a short period in which the stock moves up, but then it quickly fails, and there's no opportunity throughout the rest of the year to play this until very recently. So I always like to keep these on my list, and I look through them on a weekly basis. So over here on this gap up, it kind of registered. This was beginning of August 3rd. So this is on my radar now because of this gap up, and it looks like the trend is reversing. And since it's tidying up, there's no entry point yet, but this becomes a potential play. And we'll look at some of the others, which are actually played out a little better than this. But COLL was the very first stock in this year's list. And now this stock is in a position where it looks like it's setting up. And I'm using the daily charts here. So the next stock was CHPT, which was the second week of January. And so this was the period where it did actually set up. And you had a short period in which to play this. It did actually give you a little bit of a 10% move there. You'd be out here by, this would be a late out. You would have taken your profits way back here. Set up again a little bit in this circle here, but it kind of whipsawed you. And since then it hasn't given another opportunity. So this has been a weak stock all year. But it would have given you a 10% in a weak market. Next up is HES, which is Corp. So this one showed up in the list, but promptly failed. So that was not a good sign. It did set up again in April on this gap up, and had you played that, you had a potential to make a little bit of money, not much, and then promptly fell, sells off again, and it sets up again here. And this most recent setup is giving you double-digit gains. So just keeping these, kind of front and center. So you've got 2 out of those 3 stocks, double-digit gains already. Yuri was third up, and this one was back in January. It was really on the list this week here, this day here, this week. So even if we took the top of that, you had a little bit of a play until it sells off back here. So about 5 to 6% weakens here, sells off, it resets down here, and then from here you've got a nice little run, and you suddenly got your 20% there. It's set up recently more again, coming out of this shakeout bar for another 5 6%, but this was the main run. So keeping Yuri on your list, you could have participated in this move here. It's got good momentum at the moment. Okay, then we get to one of the super stocks of the year, ELF. So this was on the list in January, and we can see that the first gets noticed for a buy through here. If you missed this, you had this gap up on this huge volume. So even if you didn't pick it up here, you would definitely play that gap up. And from this gap up, it's never broken the 50-day till it never closed. It doesn't close below the 50-day even here. And you would still be in this, even if you just straight line this. So let's just assume you did. So that's a double right there. So whatever, if you were 20% of your portfolio in this stock, assuming you had $100,000 portfolio, so 20,000 each, that 20,000 is now 40,000. Okay, so, and you would have picked up one of the super stocks of this rally. Next up is Allegro. So this one showed a little bit of promise, but sells off, weakens, and kind of basis, sets up an opportunity over here as it retakes those averages. So if you enter, say, next day, you have a nice little move off well over 20%. So this stock gave you a 20% it's sold off now, but there was a 20% move in there. And remember, if Bill O'Neill always says that if you're shooting for singles, if you can just get into something, get your 20%, move on, get your 20%, move on, get your 20%, move on. If you can rotate your entire portfolio with back-to-back 20%ers, you'll end up with a double for the year. Okay, next is Dexcom. So Dexcom gave an opportunity to get in. It didn't last that long. And on these plays, you've got to be a little active. This one's kind of really whipsawed. It's given opportunities in the low digits. That's like a 10%er there. There's another 5-6%, but it's now this thing is weak, sold off here, broke down. So Dexcom's been very difficult to play. So it only gave you at best low single digits. And then here we have probably the super stock of this rally, and this was on our list 3 times in the best performing stock list. So you can verify all this. Just go back to the emails and see how many times stocks have appeared. So the first opportunity was to get in early February. A little gap up there. And then you had another opportunity. Well, actually, it kind of sells off a little bit, but it's in this base. And then you have another opportunity here. So you had a couple of options. Even if you missed that first one, and you definitely, this one is screaming. Look at that, the volume there, right? That was just a dead giveaway. So even if you missed this, and let's say you took this one and you rode it to the sell-off here, you got out on that gap down, anywhere in that gap down, that's another 100%, right? So you doubled your money in this one and you doubled your money in ELF. So you would have had ELF and SMCI. So on your 100,000, that's 2020. So that's 40,000 right there. So you're up to 40,000 just on two stocks, right? So you pick between ELF and SMCI, you have now picked up two of the super stocks of the rally and 40,000 on a 100,000 portfolio, not even including all of the other bits and bobs, the 20%ers that we've already looked at. So moving on, Iridium was picked up. There's a high flyer here. It doesn't hold, and so you would have probably been just stopped out. So that was one of the dead ones. Palo Alto was on the list, and so let's say you picked it up in February. So even if you missed it in here, which would have been tough to get, you got a gap up here. And so you played this to the break of the 20 down here. It's only 4%. Sets up again. So you would get in here. And let's have a look. So roughly there. So you got your 20% out of Palo Alto networks as well. So that's another stock that gave you 20%. It's broken down now. You can see it issued sell signals. So I personally am out of this, but okay. So Technoglass was also on the list, and it's breaking down. It's breaking down. So this one would have been a bit tough. So I think that was scratch on that. ANET. So this one gave some opportunities, but it's been a bit wild. So it's been a little bit hard because it's jumped around a lot based on what it did around earnings, even though it is one of the strong stocks. So if you had a kind of buy hold mentality, you would have done okay. And within our trading perspective, I mean, it sells off here. This was an earnings, then it recovered, reverses the gap up. So you would have gone back here. And you got close to a 20% from there. Then it sells off. It would have been hard to hold that. It sells off, but you got this nice close tight zone here. When it comes out of here, you got a few points. You could have gotten 6. And then it sells off again, and then it gaps up again. So this one you can see it's like the proverbial bucking bronco. Gap downs, gap up. So this has been very difficult to hold, even though it's been one of the kind of the leading stocks. Year to date, the stock is about right now it's up 45%. So if you look on a year to date basis, obviously this has been an excellent stock, but from the ability to play it hasn't been so great. You had an opportunity here. This was probably the most promising part of the run. 15%. So it doesn't quite get you to 20, but it did offer up double-digit gains. Then Mobileye, which is a re-IPO, the kind of IPO'd again from and I think it was Intel who bought them. So this one is just kind of wobbling around a bit. It still kind of seems to be in that initial stabilization phase. So I think it's a little too early. There have been, those who come to the Sunday night meetup, the Sunday night sensor meeting, know that I've traded this a few times as we've discussed in that meeting. So if you're able to actively watch this, the stock has given you plenty of opportunities. Excuse me, but you do have to watch it. And then we're back to COLO. Okay, so that so basically, just to sum up, right? The best performing stocks that are sent out in the email, you should pay attention to those. And as you've seen, this is Q1, and Q1 was the weakest of the quarters. You would have picked up two of the super stocks in the run. You would have picked up some of the leading stocks of the run. You would have picked up at least 2 to 3 20%ers and as many 10%ers along the way. And there were a couple of three dead weights as well. But you know, even if you got a mix of those, your portfolio would have probably ended up with around 70% up, just based on the high level numbers. So that wraps up this segment, and so I hope you found that useful. So I'm gonna move on to segment 2, but before we do that,